In the winter of 1974, while most Americans were struggling with gas shortages and runaway inflation, a quiet deal was being written in the desert, one that would shape the next 50 years of global power. It wasn't signed in front of cameras. It wasn't debated in Congress. The American public never even got a hint of its existence. But behind closed doors, a new financial world order was being created, one that would give America the greatest economic weapon ever invented, and one that is now, after half a century, on the edge of collapse. To understand how America gained this weapon and why it's now slipping from its hands, you have to go back to the moment the world changed, when President Richard Nixon made a decision that most Americans still don't fully understand. A decision that removed the last piece of gold from the dollar and replaced it with something far more powerful and far more dangerous. When Nixon ended the gold standard in 1971, the dollar lost the anchor that had stabilized it for decades. For the first time, the US currency was backed by nothing but trust in the government, trust in the economy, and trust that America would always remain the center of global finance. But trust is fragile. Trust evaporates quickly. And the world wasn't ready to believe in a currency that had suddenly lost its foundation. So the US government needed a new backing, something that every nation needed, something the world couldn't live without, something that would force every country on earth to use dollars whether they trusted America or not. And in that moment of chaos, the answer was obvious. Oil. Oil was the lifeblood of the world. Every factory, every army, every nation ran on it. Whoever controlled the global oil trade controlled the arteries of global power. And if the United States could anchor the dollar to oil, it would create a new kind of gold standard, one not backed by metal but by energy, one that would tie the fate of every nation to the fate of the dollar itself. That's why in 1974, the United States made a secret deal with the most important oil producer on earth, Saudi Arabia. The terms were simple, but the consequences reshaped history. Saudi Arabia agreed to sell its oil only in US dollars. Every barrel of oil, whether bought by Japan, France, China, or Brazil, would be priced in dollars. No exceptions, no alternatives. In return, America provided Saudi Arabia with military protection, weapons, and intelligence. The unspoken promise was that as long as the kingdom kept the oil flowing and the dollar intact, the United States would guarantee its survival. And just like that, the petrodollar was born. It was the perfect self-reinforcing loop. Every country needed oil. To buy oil, they needed dollars. To get dollars, they had to trade with America, borrow from America, or hold American debt. Billions of dollars began circulating through global markets. Demand for US Treasury bonds exploded, and the United States gained something no empire in history had ever possessed: the ability to print the world's most essential currency without restraint, without limits, and without competition. The petrodollar became the quiet engine behind America's military power, economic dominance, and global influence. Wars were funded with it. Deficits were ignored because of it. Interest rates stayed low. The stock market soared. The US government borrowed trillions without worrying about consequences. And year after year, the world kept using dollars because the world kept needing oil. As long as the system worked, America looked invincible. But beneath the surface, cracks were forming because systems built on leverage and dominance do not last forever. Power shifts, alliances weaken, and slowly, quietly, the pillars that held the petrodollar together began to erode. The first warning sign came from the Middle East itself. Saudi Arabia, the kingdom that once needed American protection, began to realize it had other options. With the rise of China, India, and the BRICS nations, a new era was forming, one where oil no longer had to be sold only in dollars, one where alternative currencies and rival geopolitical blocs were gaining power. But while these shifts were happening abroad, a far more dangerous transformation was happening at home. Over the next 50 years, the United States used its global privilege as a blank check. It borrowed, it spent, it printed, it expanded its military footprint across the world. It inflated bubbles, bailed out banks, and pumped unimaginable amounts of liquidity into the markets. And each time America printed more dollars, the rest of the world absorbed them because they needed dollars to buy oil. The system was beautiful in its simplicity, and catastrophic in its long-term consequences. As America's national debt exploded from billions to trillions, then into the tens of trillions, the petrodollar masked the danger. Foreign governments continued funding US spending by buying treasury bonds. Even when America made catastrophic financial mistakes like the 2008 crash or the 2020 money printing tsunami, the world had no choice but to accept the consequences. Because dollars weren't just money, they were oil. But while Americans saw the petrodollar as a guarantee, the rest of the world saw it as a chain. And slowly, quietly, they began preparing to break it. China spent 2 decades building an alternative to the US dollar system. Brazil and India formed new currency agreements. Russia switched to non-dollar energy trade after sanctions froze its reserves. The BRICS nations openly discussed a new unified currency, one that would bypass the dollar completely. But nothing was more dangerous to the petrodollar than the shift happening inside Saudi Arabia itself. After 50 years of loyalty, the kingdom began to realize the world was changing, and the future of oil did not belong to America alone. For the first time in history, Saudi Arabia signed oil agreements with China, priced not in dollars but in yuan. Then it joined BRICS. Then it announced that all currencies would now be accepted for oil purchases. And with that single decision, the foundation of the petrodollar, the system that held up the American empire, began to crack. What began in 1974 was ending. The world was moving into a new era. An era where US power was no longer guaranteed, where global trade no longer depended on American currency, where energy no longer flowed through the dollar pipeline. And as the petrodollar weakens, something far more terrifying begins to emerge. The true weight of America's $36 trillion debt. A debt that was once invisible, hidden by global demand for dollars, is now becoming impossible to ignore. Because when the world no longer needs dollars to buy oil, the United States loses the single greatest advantage it has ever had, the ability to borrow without consequences. And once that advantage disappears, the American economic system must confront a reality it has avoided for 50 years. This is the beginning of the end. The unraveling of an empire built on energy, debt, and dominance. The first cracks in a foundation that once seemed unbreakable. Thanks for watching, and be sure to subscribe for more. In the spring of 2025, the world wakes up to a shift it never expected. It doesn't begin with a bang, a crash, or a war. It begins with a quiet announcement from Riyadh, a statement that ripples through the entire global financial system. Saudi Arabia declares it will no longer require US dollars for oil transactions. For the first time in 50 years, oil, the lifeblood of our modern world, can be bought in any currency. At first, nobody seems to grasp the true magnitude of this change. Financial analysts on TV call it symbolic. Politicians dismiss it as a simple geopolitical gesture. They all assure us the dollar is strong enough to survive. But behind those confident words lies a fear they couldn't say out loud. The petrodollar system is breaking. And if the petrodollar breaks, the entire American economic structure begins to unravel. For decades, the United States built its financial dominance on one simple assumption. Global demand for dollars would always go up. It didn't matter if the government overspent, if deficits soared, or if the Federal Reserve printed trillions of dollars out of thin air. The world needed dollars. Not because they trusted America, but because they needed oil. This created a powerful, unbreakable cycle. To buy oil, you needed dollars. To get dollars, you bought us treasury bonds, which in turn funded American spending. But now, after half a century, that cycle is reversing. The moment oil becomes currency neutral, global demand for dollars starts to weaken. And with every drop in demand, a hidden weakness that has been growing for decades is exposed. America's staggering $36 trillion debt. For years, this debt was manageable because the world was a captive buyer. Japan, China, Europe, the Middle East, every major economy bought us bonds to keep their own currencies stable and their energy supplies secure. When oil stops requiring dollars, however, everything changes. Nations start reducing their dollar reserves. They buy fewer treasury bonds. And for the first time in modern history, the US government faces a world that no longer needs its debt. Inside the Federal Reserve, this triggers a silent panic. Their economic models start spitting out impossible scenarios. Interest rates spike uncontrollably. Bond demand collapses. All the warning lights are flashing red. While officials maintain a calm face in public, behind closed doors they reconfronting a terrifying truth. America cannot fund its own debt if the world stops buying it. China sees the opening first. For years they tried to internationalize their currency, the yuan, with little success. But now, with oil open to all currencies, they move fast. They expand yuan-based energy trade. Russia, already cut off from Western banks, eagerly joins them. India, hungry for cheaper energy, follows suit. Then Indonesia, South Africa, and Brazil. In just a few months, something that was once unthinkable starts to happen. The global oil market fragments. What was once a single unified system priced in dollars now splits into three. A dollar-based market, a yuan-based market, and smaller regional markets using local currencies. This fragmentation shatters the monopoly the United States held for 50 years. The world now has a choice. And when given a choice, many nations choose to diversify away from the dollar. Why? Because they fear the very weapon America has used so effectively. Financial sanctions. Countries saw what happened to Russia in 2022, when nearly $300 billion of its reserves were frozen overnight. Leaders around the world asked themselves a simple question. If the US can do that to a major nuclear power, what could it do to us? That fear spreads like wildfire. Quietly, central banks begin moving their reserves out of Western banks, away from the SWIFT system, and into alternatives. Gold purchases surge, yuan holdings increase, and for the first time, countries start openly selling their US Treasury bonds. The sell-off is small at first, barely a blip on the screen, but it grows from a trickle, to a tide, to a current so strong that even the Federal Reserve can't fight it. In Washington, policymakers watch with growing alarm. They insist the dollar is irreplaceable. They say no other currency has the same stability or trust, and they're right, for now. But what they fail to understand is that the world doesn't need a single replacement. It just needs enough alternatives to reduce its dependence. And once that dependence falls, America loses the incredible privilege that has funded its empire. Meanwhile, something far more dangerous begins to break. The American bond market, once the safest investment in the world, becomes unstable. Yields, or the interest paid on bonds, start to rise at a startling speed. Investors demand higher returns to compensate for the risk of a weakening dollar. The math is brutal and unforgiving. With $36 trillion in debt, every 1% increase in interest rates adds hundreds of billions in new payments. The US government simply cannot afford high interest rates. It cannot survive a world that's retreating from the dollar. So the Federal Reserve does the only thing it knows how to do. It intervenes. It prints more money to buy its own bonds, trying to force yields down and stabilize the market. But every intervention just exposes the truth it's trying to hide. America is becoming a self-funded empire. The world is no longer financing its debt. America is financing its own debt with printed money. The illusion of global demand shatters. As foreign nations continue to back away, something unprecedented happens. US Treasury auctions start to fail, not in a big, dramatic crash, but subtly. There are fewer bidders, weaker demand. The government struggles to find buyers for its debt. The world slowly awakens to the reality that the US government is running out of other people's money. The collapse doesn't come from a single event. It's a slow, quiet suffocation, a tightening grip on the financial system that gets stronger every single month. As this pressure builds, the geopolitical consequences explode. Freed from its dependence on the US, the Middle East realigns. Saudi Arabia strengthens its ties with China. Iran and Russia forge closer energy partnerships. The US senses its influence slipping and expands its military presence. But the world no longer fears American power in the same way, because America's true weapon wasn't its military. It was the dollar, and the dollar is losing its power. By late 2025, a new reality is taking shape, a global economy that no longer revolves around a single currency, a multipolar financial world, and a United States facing an enemy it cannot defeat with sanctions, diplomacy, or military might. That enemy is math. Debt, interest, declining demand, and rising competitors are converging. The stage is set for an economic reckoning unlike anything America has ever experienced. Once the petrodollar dies, the consequences will ripple through every part of our lives, our banks, our markets, our wages, our savings, our pensions. The world that once trusted the dollar is now preparing for a future without it. The final collapse hasn't arrived yet, but the foundation is gone, and what comes next is the moment every empire in history has hoped to avoid, the moment it finally confronts its own vulnerability. Thanks for watching. If you found this perspective valuable, consider subscribing for more deep dives into the forces shaping our world. Imagine the year 2027. The world is grappling with the consequences of decisions made 50 years ago. Decisions that were never supposed to last this long, never meant to carry the weight of an entire empire. But history has a funny way of shattering illusions, and the illusion that sustained America for half a century is now dissolving faster than anyone ever thought possible. This final chapter doesn't start with a loud crash. It begins with a silence, an eerie, unfamiliar quiet that fills the halls of Washington. For decades, policymakers operated with unshakable confidence, backed by the absolute power of the US dollar. But now, their briefings are filled with numbers that just don't add up, with projections that fall apart under the slightest scrutiny, and with warnings that no one dares to say out loud. This silence spreads, seeping into the floors of Wall Street. Traders who once barely glanced at global currency shifts now watch their screens with a nervous tremor. The charts and patterns that built their entire careers no longer behave predictably. US Treasury markets, once the bedrock of global financial stability, are now moving with a deeply unsettling volatility. And behind every sudden spike, behind every unexpected drop, lies a single, unspoken question. What happens when the world no longer needs the currency that America prints? It starts subtly. Liquidity quietly drains from major markets. The volume of cross-border trade settled in dollars begins to decline. Then comes the shift that catches everyone off guard. Foreign borrowers start choosing loans denominated in yuan over dollar loans. What initially seems like a minor financial preference is actually a sign of a much deeper trend: the growing willingness of nations to detach themselves from a system they once relied on completely. Inside central banks all around the globe, portfolio managers are quietly accelerating a massive rebalancing act. They're buying more gold, more commodities. They're setting up more bilateral currency swaps. All of this means one thing: less exposure to US Treasuries, less faith in a single global reserve currency, and far less dependence on a nation that is drowning in its own debt. And then, the moment arrives. A moment no previous generation of Americans has ever experienced. The United States needs to raise money in the global markets, and for the first time, the world demands higher interest rates. Not because inflation is high, not because the economy is overheating, but simply because confidence is weakening. The fundamental trust that once propped up America's ability to borrow has begun to crack. Every single increase in interest rates pushes the US government closer to a completely unsustainable future. Every failed bond auction exposes the fragility of a debt system that was held together more by habit than by any real necessity, and every percentage point of lost global demand forces the Federal Reserve to step in again, printing more money and weakening the dollar even further. By 2028, the impossible becomes reality. For the first time since the end of World War II, several major world economies announced they are significantly reducing their use of the dollar in their international reserves. They call it diversification. But everyone knows the truth. This is a controlled, strategic retreat from the American-led financial order. As this retreat accelerates, the world begins to build something new in its place. A multipolar currency system starts to emerge. The BRICS nations finalize their own settlement networks, completely independent of SWIFT. Oil benchmarks begin listing prices in multiple currencies, not just dollars. Commodity markets create parallel pricing systems. Slowly but surely, global trade is rewiring itself, organized around regional blocks instead of a single financial center in Washington. America, once the undisputed backbone of global finance, becomes just one player among many, still powerful, yes, still wealthy, still influential, but no longer indispensable. The consequences of this shift hit home with brutal, unrelenting force. The US government can no longer expand its debt at will. Social programs face drastic cuts. Military spending puts an unbearable strain on the national budget. Ambitious infrastructure projects stall indefinitely. States begin asking for federal bailouts, but the federal government can't fund them without printing more and more money. And as the printing presses run hot, inflation returns. But this isn't the temporary, cyclical inflation of the early 2020s. This is structural inflation, driven by the global rejection of the dollar. The cost of living skyrockets. Imported goods become luxuries. Interest payments on the national debt consume ever larger portions of the federal budget. The American middle class, already weakened by decades of stagnant wages, is thrown into an economic storm it is completely unprepared for. In cities all across the country, protests begin to erupt. Not because people understand the complex mechanics of the petrodollar system, not because they know anything about global reserves, but because their rent is going up, their savings are disappearing, and they can feel the very ground shifting beneath their feet. They don't know why it's happening. They just know something is deeply, fundamentally wrong. Meanwhile, the financial elites who benefited most from the old system are quietly repositioning themselves. They're buying up hard assets like land and gold. They're moving their wealth offshore. They're investing in emerging markets. They are hedging against the very collapse they once swore was impossible. And while they prepare for this new era, ordinary citizens are left to face the consequences of a system they never agreed to, never understood, and certainly never controlled. By the end of the decade, the transformation is complete. The petrodollar is no longer the center of global power. The United States no longer issues the world's unquestioned reserve currency. The world has moved on, and America must now confront a future where it can no longer rely on debt to fund its ambitions. But this is not the end of the United States. It is the end of an era, the end of a unique privilege that lasted far longer than anyone ever expected. The end of a financial structure that was born from a secret agreement made in the desert half a century ago. It's the end of a world where oil and dollars were two sides of the same coin. And in the quiet aftermath of this monumental shift, a new truth emerges. A truth that economists and politicians have always known but never wanted to admit. No empire lasts forever. Not because it falls in a great battle. Not because it loses its will to fight. But simply because the world changes, and those who refuse to change with it are inevitably left behind. America now faces a choice. It can adapt to this new global landscape, or it can cling desperately to a past that no longer exists. It can embrace cooperation and partnership, or it can fight for a dominance that has already slipped away in silence. It can build a sustainable future, or it can chase the fading shadow of an empire. The collapse of the petrodollar isn't just an economic story, it's the story of a world rediscovering its balance. A world no longer dependent on a single currency, no longer controlled by a single financial power. The final betrayal wasn't when Saudi Arabia ended the oil deal. The final betrayal was the illusion America built for itself, the illusion that the system would last forever. But nothing in history lasts forever. Not empires, not currencies, and not even the dollar. This is the end of the petrodollar era, and it is the beginning of something entirely new. Thanks for watching. If you found this perspective interesting, make sure to like, subscribe, and hit the bell icon to stay updated.